Hello viewers all over the world. Welcome to this week edition of our forex trade analysis. We will today again be looking at our main forex pair, which is gold and the US dollar. Before we go into today's analysis of what is going to happen possibly the coming weeks, I would like to ask our new viewers to subscribe to this channel and hit the like button as well. In today's episode is going to be a random one. The expected outcome is for us to have trading entry plans for the week ahead so that we can make the best out of it. If you can see, there are a lot of volatility in the last few weeks after this much consolidation. Let me go to the daily time frame. Okay, I will remain in the 15-minute time frame for now. You see, you have some spotlights where you have spikes and then consolidation, spikes, consolidation, and so on and so forth. As we know, it's a currency pair that usually give us a good return when we luckily have the market go our direction. So, but how do we catch those impulsive moves that give us good returns on our investment? As we usually says, what the analysis we are going to give is just our own what we feel the market will behave based on our own trading strategy. It is not actually a financial advice for you to enter the market blindly. You have to still apply your proper risk management and ensure you consult your financial advisors before you risk anything into trading. Again, do not risk more than you can afford to lose, but we are sure and certain that if you apply proper risk management, you will be having a good return to reward to risk ratio. Okay, having said that, let's do first of all our top-down analysis. If we look at the weekly chart, it seems we are consolidating at this zone. If I say zone, I'm talking about, okay, let me not use this. By the way, for those watching our review for the first time, this is TradingView. I'm using the platform from TradingView to do my analysis. They have a lot of charting tools that enable you pick up analysis easily. So we are ranging within this box in the daily time frame. Okay, so what are the potentials? First of all, before I go into the potential, as I said, this is the weekly time frame. You could see that we came into this box. This is a dynamic support and the resistance zone. When we entered this box from here, it bounced back, then it came through, retested it. This was a fake breakout. Yes, a fake breakout down here, and then it went straight up to hit this zone before it retraces back to this zone again. Now it has found its way back to this zone, touching this zone again. So what is likely to happen? Are we going to see a retracement back to touching this zone, or are we going to break this zone as it did here? So this is where trading experience come in, and also you need to, as I said, you need to apply proper risk management. There are a number of tools out there some of them are also here, plus your market psychologists, and also the fundamental analysis, that when you combine them together, you will have a guide, a fair estimate of what is likely to happen. So among these tools, let me first of all show you one easy one. I turn this to a line chart, right? Some things are possible when you look at, okay, data. When you say data are things that provide insight. When you look at data, you are able to come up with either shapes of various types that will tell you that, okay, this is what is happening here. So looking at this, I could see a formation. If I want to, let me use a line connector. Where is this connector? I want to use a line connector to actually connect this. By the way, this is pure price action, so I will use random tools to actually come up with what we are looking for. If I do this, it came up here, it came all the way down here, it came up here again. So the question is it going to come this way, or is going to break this, or what next? So at the moment, I'm going to drop this. I would potentially be thinking that this is the direction that it has to trade. How far, I don't know. Sorry, let me terminate this here. Okay, potentially. Remember, this is the weekly time frame. Now, I want to do something quickly on the daily time frame. Sorry, this is network challenge. It will come up. When it comes up on the daily time frame, I will return it back to the normal graphical chart. Then that is the candlesticks themselves, and analyze again. Analyze again what is the. I think I need to change this network. Okay, good. We are here. Now, let me reduce this. Let me fit it to the screen. Okay, yeah, it's auto lock, fit to screen. Now, let me go to, yeah, this is the daily time frame. Now I want to change it back to candles to see if there are things we could deduce from what is happening here. So now on the daily time frame, I have to refix this. Each time you go lower, you have clarity on the candlesticks. Actually, we had one that shoot up here to touch this. Then currently, if I would want to use this as just leave it here. Okay, for now, let's leave it this way. We will adjust it further. Okay, so what I want to do is to freeze this. I'm locking it. Then I'll make it visible. Okay, I should make it visible from the 4 hours time frame and above, because the next thing we're going to do will have some impact on this. So I want us to have, this is higher time frame. With the higher time frame, I want us to use it to determine what is the direction of the market before we go into where we should do our trading setups. Okay. Okay, good. This is the 4 hour time frame. So here I want to make this visible within from 4 hours and above, current interval and above. So if I go below this 4 hours setting, I will not see this. Again, if you check here, this is I can't tell for now whether it's forming a dynamic resistance zone that it's not broken. I didn't fit it well, but whatever it is, as I said, data speaks. So whatever you see, shapes, whatever it is, you combine them to make your own informed decisions. So now we are here. In the 4-hour zone, if you check, this is a ranging market, it's still ranging. Now, this ranging, you need to exit this ranging before you could talk about again, let's put something that could give us an idea of what's happening. I'm joining the weeks here. Okay, if I join this, then I move this a little. No, I've joined the downlines. Let's see what we can do about the ones up. It's not fitting. What about this? If I fit it to that one, is it fitting here? Yes, it's fitting perfectly. So I have been able to get a triangle from here. Now, if this triangle would tell me anything, I saw that from here. Okay, let me see if I can extend this backward a little. Yeah, because this is how you do your chart analysis. Anything the data tells you, make use of it. Okay, this is how far I can this is how far I could go here. Why did this one shift? And here, this is okay. Good. What is it I have done? I make sure that these candles fit in here. You have this touch. The areas you have multiple touches. So if we look at this, we would want to say that when it started here, it started small. From here, it started small. It began to expand and expand up to this point. This is the largest width of this. Then it's like mirroring itself. It began this way again, narrowing down up to this point. Now, what other thing can we see from here, from this candlestick patterns? Again, I see that it is, not this one, I'll use this. It is as if at the exact point we are now, that this is okay, we had this, broke this, it came back here, retested, it went up again, came down here, retested, went up, retested, up, then here we had a partial breakout here. Let me circle it. We had a partial breakout here. Okay. Then it retested again, and at this point, luckily, this should be last week, right? We're in the 4 hours time zone, so it broke it. Now, what is it? What will easily come to mind is that, are we going to see this type of, remember I mirrored this, right? Let me see, I have this like this, I have it like this, then I mirrored it. So is it possible that we are going to begin to see, because this has tested this side multiple times before it got here, are we going to have a repeat of same here, that it will test it the same length of time? Or here, when this broke through here, it tested, right? We have this angle here. I think again, if you see what a funny one this evening. If I break this into two halves, I could see a mirror that this shape here is a reverse of this shape here. Tell me if it's true of us that this is more like they are facing each other. This is what is dividing them, even though it's smaller this side, and we could say that is because of the triangle that is getting smaller here. Then if that be the case, can we extend that mirror beyond just this place, as in beyond here? Because if I say this is equal to this, then what happened beyond here? Which mean here we had this, right? So meaning if I'm to use that as a judge, then a judgment, which means this is going to go up a little. I don't know whether it's going to touch this or not, but this is potential. Now I will stop it there. If I zoom out now to see what the chart looks like here, is there anything of interest that we could see? Is there anything of interest here we could see in relation in regards to what we just discussed now? Of course, yes. What is of interest here is that I see engulfing candles shooting out of this zone. This candle is engulfed here. There was a retest of this zone. Then another strong engulfing candle happened here. If we are to go by this, I would project those of you that has watched our videos when we talk about the wave theory. Because here, if I go down to now, I will go to 1 hour time frame. If I go to 1 hour time frame here, what did I see? I see that after this consolidation happened here, we had more like, I'll put a line there again. I'm putting a line here. Let me reduce the point. I want to make it different from the one you're looking at on the screen. Change this to dash only. What happened here is that there was a test of this region. It came back and it broke it. When it broke this region, let me lock it. It came back to retest it. It came back strongly and it bounces off strongly, which is this. We saw this in the 4 hour time frame, which is a very hard rebound. Now, if you also look here, you have seen that there is when it touches this region, it bounces off. At least there is a candle of this, and now another full candle has just formed in the 1 hour time frame that is kissing this at the moment. So are we going to see a multiple touch of this zone, or we are going to see an outright break of this zone? I will leave it to you to add the pieces together. I'm just showing you all possible scenarios around here. So for me, I see something happening here. And again, note that we are still trading within the box, within that triangle. Let me go to daily time frame back so that we can see how long it's likely to take us to exit this triangle. Once we are expecting a breakout on or before the exit of this triangle. And what are the potential things that could make? Again, I will tell for those just watching us for the first time, if there are things we explain here that are key concepts I mentioned during this analysis and you want to know further, search through our recorded videos on this channel. You will see a lot of the tools we are using to do our analysis. But for today, I'm doing a random price action because I want to do market setup for next week gold trading, starting from Monday. Of course, Monday there are usually little activities. You do have consolidation here and there. The first major activity we should be looking forward to, let me auto lock this, is on this is daily PPI. These are the past news. FOMC minutes. This would happen on the 21st Today is 18, 19, 20. That's Tuesday. This is the nearest one coming on Tuesday. What is this? Okay, these are just insights, market insights. So on the daily time frame, we have this triangle forming. So as I said, we saw a mirror here. This and this was mirroring themselves. I don't know as well if we look at this detail that I had 1, 2, 1, 2. Okay, perhaps this is another mirror. I have, again, if I'm looking at this with the mirror eye, I think I would rather divide it this way to tell that it's also a mirror. 1, 2, M down. 1, 2. Is it going to be M down as well? Time will tell. This is one. Secondly, remember, I fit in this frame from the weekly time frame. When I fit in this frame from weekly time frame, we said from the weekly analysis that the next direction is likely to be downward direction. Okay, this could take the whole of this year to get it here. That is, if it did not break beyond this. If it break this triangle and it decide to break up, which is also a possibility, then we are looking at this zone. But if it did not break this triangle and it wants to assume the mirroring pattern we saw here, the mirroring of the candlesticks pattern we saw here, then it is going to go downward. So if it's going, that's one. Secondly, there's what we call, if you look at, there is a gap here between this candle and this candle. When this happens, we call it fair value gap. So this fair value gap, or this fair value gap, what usually happens is that market do come back to close this. When it happens, it's usually a trading opportunity. Anytime you see it, then you know that, hey, likely the market is likely going to come back one day to close it up. How long, we cannot tell. Now, going by the mirror concept, where we are able to divide this, is there a way we can also check if this has happened in the past and what were the leading events? I think this look like one, though not very big in the daily time frame, but this is a huge one in daily time frame. If I go to lower time frame here, let's see. If I go to lower time frame here, can we see anything? Let's see, just let me know the date. This is March 2023, March. I would like to look at it from the 1 hour time frame first. March 2023. Sorry, we didn't have a very good network today. Okay, at least the screen is still visible before it takes us out. So, oh good, we are here. I used this, not the one. March 2023. This is that our mirror. Network is very poor. Okay. March 2023. Okay. Okay. If I'm not able to pick it, let me go back here. Let's continue with our analysis so that we can round it up on time. Again, just stay tuned. We are going to have what we are analyzing is to tell what is the potential move for the upcoming week trading on gold USD currency pair. So let it load while we're waiting. I want to look at the triangle again and look at the formation. Remember, our trend as shown from the weekly time frame is that this trend is in downward trend. Then from the mirroring concept, I'm taking out this mirror. At least we have seen, I use it to explain what I want to explain. I have two tops here, 1, 2. Then if I look at this side, I also have two top, 1, 2. This one is coming from below. It formed, let me put the shape it formed for you as well. Where did I pick that tool? Is it here? Yes, part. So this is the shape it formed. Up here. Let's change the color for this one to what? I don't know color by names. Let's change it to straight line. It's not bright enough, right? Let's see. Yeah, is this? Let's look for a color that will be sharp on the screen. Then change the length. Okay, so I have this here. I want to take out the triangle, or I will leave the triangle first. So here, if I look at this from here, how do I fit in this again to look like this shape? That's, I have to do it the opposite, then I'll fit it into here. This is the part again. Ignore what I'm drawing first. Okay, let's do it this way. I said we have fair value gap here. Let me take it like this. I don't know how high. 1, 2, 1, 2. Okay, let me do this. And let me do this. I just want it to look this almost the same. Then I'll begin to fit it. Now I'm taking this one out. So I could actually now move this to correspond to this one, right? Then I'll move, this is supposed to be, no, this is not here now because the price has not come. So possibly this could happen. Then this will now follow this leg. This is a possibility. I'm not confirming it is yes what is what's going to happen, but this is a possibility. Now, what other thing can we do here to just guide our analysis today? I want to marry this to something within this area. Then I also want to take the head of this to this. I'm just trying to see if I can get a match. Then also take this, let's say this is the tip here to here. Well, not perfect, but I'm not ruling out possibilities that that there is a replay of what has happened here before. So this one now, if I need to fit it after this drawing, is to now fit it maybe something like this, right? We have an umbrella shape. Oh, we have an umbrella here. This is good. Okay, now back to real business. What have I seen here? What other thing? Now let's talk about confluences. Okay, I have 1, 2, 3 run. Then I have 1, 2. 1, 2, 3. I could call it 1, 1, 2, 3, 1. Then usually this will correct. Then we'll begin another count again. Okay, this is another way to look at it. Now I want to go to 4 hours chart to do my analysis. In the 4 hours chart, where are we? Okay, again, don't forget this what I'm doing is just pure price action and technical analysis of charts. Okay, so now I have to add my confluences and see. I have just said something about fair value gap. When this happened here, it took like, now we are in the daily time frame. Let me tell you how many days it took before it was corrected somewhere here. I think, yes, it was corrected here. So from here it happened, and this is where it was corrected, right? It took 143 bars, which is 143 days before this correction took place. 143 days before the correction took place. 143 divided by, if you divide 143 divided by 7, that will give you the total number of weeks that it happens. Let's look at that. 143 divided by 7. I'm coming. I'm using calculator from another screen. 143 divided by 7 gives you 20 weeks. 20 weeks, if you divide it by 4, 20 divided by 4, that's 5 months, right, before it happened. Now let's see if there is a coincidence here. I've not checked, I just want to check with you now. This happened October. Let's see where, okay, up to this point we've had 93 bars only. That's about 3 months. Are we saying that we have 1 month more? Let's say 143 bar is here. That's end of April, between April and May, that they potentially gold might be getting here. That would be a big claim, but who says it is not possible? It is a possibility that within that time gold will be getting here. Okay, so but looking forward, we leave this as it is. Looking forward to, and again it could also go beyond that, right? Because if you see the current resistance that we're having here, it's actually not forming along that. It might be longer, it might take us longer to than we had between here and here. Okay, so now this is it. So what else do we look out for, especially for next week that we are close to? I'll be taking out some of these fun I had on the screen, but they are fun, they actually make a lot of senses. Then let's look at here the current region we are in. I'll take from here. I'll do this. You could see there are some resistance along this zone before it's broken. So the first thing I will look out for next week is a retest of this zone. That's around 2021-2022 region. 2021-2022, then if it is broken, again you see more like a confluence here. If it's broken downward back, then we will be looking at on the daily time frame. Interesting. So next week we have only 5, which is starting tomorrow. We will be having only 5 trading candles. So let's see the length. 5 would be 5 would be from here, which potentially this is the first candle. 5 candles, 5 daily candles will only be ending here. Is there possibility, okay, coupled with trading news, anything can happen, but the last candle will form here. So now that we already have 2 up, 2 green, could we actually possibly be having a downtrend from here? What are the other indicators that could help us read this? So what I will now do is to bring my favorite where is it? Is here my favorite Elliott wave Elliot, where are you? Thought you were here. Do I have it here? No. Elliot wave part. Okay, let's check here. Not here. Yeah, Elliot wave pattern, where I'll be counting three possible. Sorry. Oh my God. It's it is the network again. So the Elliott wave, I want to, oh God. Okay, just let's be patient. I think I need to change the network source. Let me change this. I need to change this. Which other one do I use? Let me check this. If it's better. Sorry. Okay, it's also the same. Refresh. I'm refreshing the page. Have some interesting stuff. Okay. Let me share another network, since that did not also work. Okay, let's go for this. Okay, I've changed the network. Let's refresh again. I think this is better. Sorry for that delay. Okay, so as I said, I want to apply the Elliott waves. Let's see what it gives us. We are talking of a retest of this region. This region was broken, then a possible retest. So what we do is we could take, if I read this is going to happen big, let's say 1 1 2 3 1 1 2 3. So now I start from here. 1. If it retests here and move, that will be 2. Then I'll be having 3 around somewhere here. We have 4, then we might have 5. Okay, then let me take out this mirror. I've taken out that. So now we are left. So I want to make the chart a bit clean. Thank you. You've done your part as well. Take out this triangle. You have equally done your part. Okay, so now what we are left with is to look at these possibilities. That this could be the possibility for upcoming weeks, not only week, because I've not measured this. I'll measure it and put potential points where they could likely be exactly. This might not get up to this point. It might be looking at this. Okay, now let's use the Elliott wave calculations to see what do we have on the chart and what we're likely to look out for, as I said, next week. So from here to here, let's measure this. We have from here to here, the last candle here, right? This is 102.96. That's this point, 102.96. So if I use 102.96, 102.96 multiplied by 1.618. This gives me 166.589. 166.589. So 166.589, what will happen? I will take my ruler again. You can multiply it out yourself. What I have is 166.589. So I will measure from the potential turning here, 166.58. So I will approximate it to 0.59. So this is the region. This is the supposed region where this is to come. 1865.37. 1865.37. Let's put a line there. 65.37. Okay, and again, for those of you that have not, you are watching us for the first time, if not subscribed, please hit the subscribe button and also like this video. Okay, we catch fun together like this, and then when we make money, we smile. Okay, just a moment, please. Sorry about that. So the other thing I see here is that this run, which is likely to play out here, if there possibly there might be news around this area that we push this, I don't know. If it's going to happen, looking at the mirror top down, mirror analysis we're doing top down, this is close to this fair value gap. Again, is there any other thing that could probably guide us to what will likely happen here? Let me use the Fibonacci retracement and see what we are having there. From here, I will reverse this. Okay, let's do this. Okay, so we had this retracement 0. This is within the 0.8 retracement, 0.786 and 100% retracement, which is likely not a retracement again if it has to go beyond this zone. If we check this around 80 something, it's around 86 or whatever it is to this point. But if I want to take out this, if I want to remove the outlier here, because this was as a result of the effect of news event, if I want to take this out, I could say that, one second. If I want to take this out, what are the possible things here? I I could change it to line graph just so that I can see clearly what it looks like. Okay, if I change it to line, then let me refit this to just this. I need to take out the outliers. Okay, maybe I should delete this outrightly. Let me do another one. Okay, so I want to take out the outliers. So I will measure from here down here. I have this run, I had it up to 6-1. Okay, let's extend it, right? The initial break, sorry, I have to reverse it so that we can count downward from that zone, thinking if it's going to come this way. Okay, wow. I had the 23 region, it came back, it went to, if I change it to candle now, because the wicks are out here, so let's change it to candle and see, so that the wicks will be part of it. All the networks are down. Okay, I think maybe it's because of the weather. So it comes to the 38 region, then it retraces back to 23. Usually it should be coming to the 0.5 region, which is corresponding with this here as well. This is the next support zone here. Let me put a support here. We have support. Oh, sorry. It's another support and resistance zone. I need another network. Scanning for network. Okay. Of course, and if you see the Elliott wave I have fit in before is also sitting perfectly well within within the one of the Fibonacci retracement levels, which is a good thing. I think 0.78 I saw. So this combined is giving us good indication that yes, while the market might start quietly on Monday, tomorrow, it's likely to play out the Elliott wave pattern. Remember, I did not just start with the Elliott wave analysis. I had done a lot of the data has spoken to us. You saw it on the screen. I didn't rehearse it when I started, but yes, we see that there are a lot of symmetries. There's natural shapes that formed out of the chart, and then because history do repeat itself, especially Fibonacci also say, if you look at the spiral Fibonacci shapes, so there is a possibility that there is going to be a repeat through the mirror effect backward, which is going to play out in the coming days. And perhaps, who knows, if it could take us through because when we look at that number, 143 is not a short time. It might take us up till May, June. So these are just natural analysis. Unfortunately, the screen is not permitting us to go further, but I believe if you've been following our class and you know that we have these tools already. There are different videos on each of the tools I mentioned here, except for the price the price action, because price action comes naturally. You combine a lot of things. Watch out for next week. I see the FOCM news coming up on Tuesday. Look up as well for other news that could affect the dollar index, and also look at other currency pairs that would maybe perhaps their news would have a direct correlation with gold. But I would hold my breath if I see what I would do, because the entry position is clumsy. It's likely starting with a little move upward, likely. So I would rather wait to see what will be happening, whether I will have an entry point to ride a sell. I'm strongly for sell, because the weekly direction is downward, the weekly trend is downward. The daily trend might just be retracing only as at now, to retrace to that zone where we had the triple top, the head and shoulder formation, and then it's going to retrace back to retest the neckline of that head and shoulder formation. Then it will go downward. A lot of confluences, a lot of things we have talked about. We showed the mirror effect and what could possibly play out. We now talked about the head and shoulder formation. We use the weekly time frame analysis, the daily time frame, plus the fact that we have a very strong fair value gap that is yet to be filled. If we look at the Elliott wave patterns, the one completed, possibly going for two, and if it fulfills the conditions of Elliott wave, we should begin to see a ride for three. So this is where I will put a stop to this analysis. Go back. This I've given you insight. I've given you hints. Go back to the drawing board. I watch this video to the end. Go back to the drawing board and also have your market plans. When network permits, I'm going to actually now look at these key areas I have mentioned, and also put my markets there for the coming week. Also, don't forget the whatever we have analyzed now does not sit with gold only. You can use it on other currency pairs. You could use it to trade indices, anything, future, derivatives, whatever you have. So what you can do is, they are natural thing. Price action is real. Price action happens, and look at whatever you can grab. Form a strategy of your own. Most importantly, you need to connect with data. You need to watch data behavior, and then whatever insight you make out of it, there is no wrong answers to it. Your insight is your insight. Believe in yourself. Don't run around beat about, jump into what did this person say. Don't go look for signals. Even robots, don't go look for robot signals. These are the things that were programmed into whatever it is that is giving you those signals that they give to you, and some of them you still have some losing runs on those trades. So I would advise you learn to know it yourself, then apply it yourself. Knowing it yourself does not rule out you somebody tell you, hey, can you look at this? But yes, of course, when they say look at it, you know why he's saying that the market is moving in the downward direction or is going to move in the opposite direction. If you like this video, please hit the like button. And then for those of you that just joined for the first time watching us, subscribe to this channel so that when we drop analysis like this, you would also be among the very first few to take advantage of our signals. Happy trading. Bye-bye.